No sooner have we clicked the broadcast button and the participants' numbers start to rise. Good morning. If you're sitting there waiting patiently for us, we did think we'd start the session broadcast a little bit early, so we will be kicking off formally shortly. I'll make introductions and we'll get underway and just give people a couple of minutes now to log on and get comfortable and settle in and take a sip of coffee. By all means, make sure you've got sugar in it, because energy is going to be what you need to go through this, the FCA's business plan today.
Nick, are you saying we're going to be tiresome, or that it's a challenging topic?
I'm saying, like we always do, Julie. We plan 3 hours of content and try and cram it into 60 minutes. That's the way of our webinars, I think. So it's just an awful lot to absorb in a very short amount of time. Exactly.
Yeah, I think you're right. Do you know what? I was, as I was thinking about this morning, and I was thinking, great, we'll do the normal thing about, you know, the weather, and what the weather's like from where you're joining us from. And when I woke up this morning, it was gorgeous and sunny, and can I say warm compared with yesterday? And that's lasted about 2 hours. It's now pouring with rain and freezing again.
Yeah, it doesn't bode well for the Jubilee weekend, does it? You know, I mean, I remember the last time we actually sat in our street party getting absolutely soaked in our ponchos.
I was only saying yesterday, Paul, the last street party I remember, I think I was about 11. It was in, was it 76, 77, the Golden Jubilee, I think it was. But so I have pictures of me eating jelly and drinking pop. Yeah. Well, shall we kick off? We're a couple of minutes past the hour now, so as we've said, we've got an awful lot to get through, so we'll kick off formally now. Good morning, everybody. My name's Nick Dent. I have the privilege of being your host today. As we've said, if you've listened into our preamble already, we have a really intriguing subject today, the FCA business plan. And I guess it's our objective today to kind of analyse what that says and bring it into the real world, you know, translate, I suppose, the impact on everybody in their day-to-day working lives. You know, if we get that as an outcome at the end of today, that would be fantastic. So to do that, we've got some great contributors today. I don't know whether you want to move the slide on, Julie. Thank you. So as we said in our introductions, we're joined by Paul and Matt, two directors at Square 4 here. So if you're unfamiliar with Square 4, they're a consulting and resourcing business, supporting the regulated community, obviously, and ensuring compliance and operational resilience. So we know the two of them from here at Worksmart. We've known them for a number of years, a hugely experienced pair of individuals. So great to have you along both, and looking forward to the discussion today. We hope we question you as hard as we plan to do. So that's great. As I said, I've introduced myself, Nick Dent. We're also joined by Julie Pardee, our own Director of Regulation here at Worksmart. So welcome, Julie. Great to have you along again for the discussion today. And in terms of everybody's involvement in this, as we always do, we love questions. If nothing else, it gives us an opportunity to answer actually what's on your mind. So please do use those icons at the bottom of the page to submit your questions via the QA button, and also share your experiences, your thoughts, your comments. We will be sharing the slide deck after after the broadcast today, along with a recording of the session too. So if you miss anything, then worry not too much. It's a recording and a copy of the slides is on its way. But included in that, we will look to follow up in a few days' time with a proper consolidated questions and answers document as well. So if you submit questions today, if we don't get time to kind of address them before the end of the broadcast, then we will pick those up in that document at the end anyway. So if you don't mind, just to make sure the technology is working right, let's start off as we mean to go on. It would be great to hear from some of you where you're logging in from, where you're listening from. Julie's mentioned it's sunny and showery and rainy and warm and all those kind of things down in Bournemouth. It would be great to hear from you wherever you are and what the weather's doing there. So yeah, submit that in the chat at the bottom. So great, Lorna, good to meet you. Good morning. From Nottingham is overcast apparently, so and cloudy in London, so we're all experiencing the same. But let's settle down, let's kick off. If I hand over to Julie just to kick off, keep those questions coming, keep those comments coming. I can see you're all hearing us properly, so that's fantastic, and I hope that today proves useful and engaging for you all. Julie.
Brilliant. Thank you ever so much, Nick. And I'd just like to add a really warm welcome to Paul and Matt as well. I know you're really busy. I know that a lot of people are availing of your services in support of, for example, the consumer duty that everybody's grappling with at the moment. So thank you so much for taking time out of your busy diaries to come and join us for this. I know as well that quite often now when we have these webinars, we have a lot of interest beforehand. So I think Nick has, and I have, a number of questions that the interested parties have already sort of put to us. So we may try and weave those in as we go through the discussion as well. But if we think about what we're trying to achieve here, I think it's just echoing what Nick has said. So we've had the FCA strategy document. Quite interesting that we had the 3-year 22 to 25 strategy document published with the business plan. And I think it's our opportunity, I guess, to talk with Paul and Matt as industry practitioners and experts about their take on what this means. Obviously, Worksmart, we're dealing with some of the biggest regulated businesses in the UK, so we'll have our views as well, but we'll try and do this through the means of sort of discussion, focusing on some details that we have in our slides. Please don't leave questions and answers to the end. I've learned through these webinars that I cannot speak, look at a slide deck and read the Q&As as they come in at the same time. I just can't do it. So I know that Nick is scouring those, and sometimes people will put them in the chat, and that's fine too. But where we feel that it will be appropriate, Nick will interject and he'll put relevant questions to us as they come up, or if he feels more appropriate, we'll go to a Q&A at the end. Those of you that are familiar with our webinars know that we tend to start with looking at the recent FCA commentary. Because actually we like to try and read the mood of the regulator, read how they're feeling, what are they signalling in what they're actually saying. And I think we pulled these up because they are all very relevant and they're very recent. And Paul, I know that we were talking about this before, and I wondered whether I could bring you in with a view about the recent fine and enforcement activity that you've been seeing, and whether it plays into and talks to some of these points that the regulators alluded that they're actually going to be changing to.
Yeah, okay. I mean, look, if you look at the kind of the rhetoric there that you've got in those three kind of like sort of areas, you're talking about the kind of the whole strap line from the FCA, which is about innovative, more assertive, more adaptive, etc. And you know, and as you read the business plan, you see that kind of coming throughout, and particularly in the assertive. If I take that word, you know, that there is a real desire to kind of ensure that they tackle what they kind of call the serious harm. And previously, you know, you'll have seen everybody who kind of reads things like the FCA kind of board minutes that they that the number of cases that have gone through the kind of enforcement were not great. They were quite slow. They had quite a cautious approach. And certainly I think there is more appetite to be tougher with firms and to be kind of more agile in terms of their kind of the handling of kind of cases. So, and I think you're beginning to see a bit of that now. So certainly if you look back over the last kind of couple of years, you'll see probably a couple of trends, in terms of last year, it was pretty dominated by financial crime and some of the big firms. The year before, much more kind of prevalence around conduct, but fundamentally last year's there was a significant increase in the total of fines. I think it went up something like 190% to quite a significant amount. And I think what you're seeing now, although that was kind of directed much more at the kind of the bigger firms, you're certainly seeing some smaller firms get hit as well. And I would expect that to continue as well. Particularly kind of, and we'll talk about data, I'm sure, as we kind of go through this and the importance of data, but things like some of the firms that are being hit with kind of pension transfer, and that ultimately stems from, data that the FCA have kind of accumulated around the number of kind of defined benefit transfers, etc. And I think that's just a signal of kind of more and more kind of focus from a data point of view. I think, the other one on there is about kind of imbalance. And again, we might talk about that a bit more, but the imbalance of knowledge between financial services firms and customers, and that plays massively into the consumer duty element, etc. That I know is such an important part of this business plan as well.
Just going to add, if I may as well, Paul, I think this feels like, reading through the plan, it's an opportunity for Nickel to really put his stamp on the FCA. If we look at the last couple of years, you've had Brexit, you've had the pandemic. The FCA have been hugely reactive. I think they're now stepping onto the front foot, looking at those real structural issues in the market, going back to Paul's point, and he's trying to really change the direction now. And you're seeing that through this business plan. It's quite forward-looking. It's not just reacting to COVID and Brexit and other issues in the past. He's trying to put a stamp on the organisation.
Yeah, I think that's interesting, because when I was looking at this and thinking, the 3-year strategy is a greater timeline than we've seen before. And I was talking to Paul yesterday, and I thought, observations about things they've done recently. And there was one thing that really struck me, and this concern about basically having the good players in the market continue and giving greater levels of protection to consumers. And the one thing that really caught my eye, and I'm just going to reference notes because people may or may not have seen this, and it was a recent application for an organisation that wanted to become a principal and have ARs, and actually they were refused. And I thought it was quite interesting because if you haven't seen this, it's worth having a look at. And it was a particular firm called Alexander John Compliance Consulting. And basically they put in an application to become a principal. The commentary, some of the commentary from the FCA and the words that struck me, the organisation was unable to describe a viable or sustainable business model. And therefore, that was the part of the reason. I mean, their timing wasn't great, was it? We've got a consultation paper out with concerns around principal AR relationships and control and oversight. But it just struck me that if we're trying to connect what they're saying they're going to do with what they're actually doing, there are many connections that we can make. Because I think a concern in the past has been maybe there's been discussion, but you haven't always been able to visibly connect the action.
Yeah, what I'd say there,
you're right.
What I'd say there, Julie, is things like the assertive the ethos there straddles the whole kind of regulatory kind of life cycle, and I think people will see that authorization, supervision, and enforcement. Obviously, I just talked earlier about kind of the enforcement. That's just one metric. If you look at the authorization kind of process as well. I think the FCA have certainly realised, and we are seeing a much tougher approach to kind of authorisation, that they clearly don't want firms, within the perimeter only to cause them problems at supervision and enforcement thereafter. So a much higher bar that starts at authorisation, continues in supervision, particularly with the advent of the consumer duty, and then a tougher, kind of stance for firms that get this wrong. So I think that, you know, that really plays through kind of the real kind of regulatory life cycle.
Yeah, absolutely. Well, that's good. And on that note, I think Nick is going to kindly set a poll going for us. So, you know, we've been talking about this. The regulator says they're doing things. It seems apparent that they are. And we just want to know, you know, what regulated firms are hoping for in terms of what's going to be delivered. And hopefully you should see on your screens now the polling questions that will give you single choice. And if you have any other view, it'd be brilliant if you could tick other and then put your comments in the chat. But from your perspectives, obviously, both yourself, Paul, and Matt, you're regularly in organisations. You're regularly talking to the senior managers, talking to the staff. Is there a level of frustration there with the regulator? Because I know there has been some slowdown in certain processes, very specifically authorisations for senior managers, and people can maybe say, well, that's about you know, them being slow, they're not being organised, or is it because they're being more prudent? Have you got a view on that?
Yeah, happy to jump in, Julie. I think like we'll be lying if we were saying there was no frustration. Everyone was happy. Unfortunately, the nature of the regulator is, you know, it means that sometimes they don't get things right, and actually things take longer than would be ideal. But actually, the pinch points have been, you're exactly right, authorizations. You know, we've seen firms waiting up to 6-7 months just to have a case officer assigned, which, you know, when they've got the competition objective, when they've got other objectives there, actually does become quite a long process. We've seen with appointed representatives as well, trying to get onto the CF1ARs, for example, onto the register, is taking months sometimes for our clients. And there becomes a point where that does become almost anti-business if it takes that long to make simple changes to the register, if they've got everything in order from the client's perspective. So it has been tough, but equally firms have been understanding, given what's happened through COVID, given what's happened with Brexit. But I think that understanding is starting to wane a little bit, if I'm honest with you. I think there's a view now that actually the regulator does need to resource itself, does need to do what it says it will do. And actually some of the things that are coming out in the business plan, measuring against outcomes, measuring against their own metrics, are a positive step that our clients have actually reacted quite positively to.
It's interesting as well. I've just published the results of the poll, and you can see what's floating to the surface there. As always, firms are looking for more guidance from the regulator. But Paul, I mean, this certainly matches up to the conversation we were having on the lead up here, doesn't it? Where we were discussing, you know, how firms are finding it really difficult to mark their own homework and benchmark themselves against expectations and this kind of thing. So, I mean, with that in mind, what would be your comment about how that issue of firms struggling with marking their own homework and understanding where they are? And realistically, are we going to get more guidance around implementation from the regulator?
Well, I think it's an interesting one with this, isn't it? So, and I think firms, so quite often you hear that and they want kind of greater guidance. That said, the business plan really and the ethos of the regulator, I think, is actually the opposite for that. It's giving firms greater flexibility. It is much more about outcomes. Firms typically like the safe harbor that comes with the rules and the guidance and knowing that they can comply, etc. But, you know, we are moving to a world where firms operate to greater autonomy in an outcomes-based regulator with outcomes kind of based kind of models, and much more aligned to kind of senior management responsibility, giving firms the flexibility to run their business as they see fit, whilst acknowledging that they obviously need to, you know, kind of, you know, adhere to kind of, you know, market kind of standards, you know, the avoidance of harm, etc., for consumers. So I think, you know, this is where, you know, ultimately we can play a part and support firms in that endeavour as to what's the standards, etc. Where are their peers on some of these things? But, you know, I think going forward, you're going to see, you know, less and less, and it's more like prescriptive regulation and more principle, more outcome based. And I think that's then a good thing for firms, to give them the flexibility and a bit more kind of innovative about their propositions and how they kind of go to market.
So on that note, should we have a look at, I could see, Paul, while you were talking, there was a comment as a result of that poll, and just asking about capacity and capability at the FCA. So I think it's worth just taking a moment just to have a look at this and just focusing on where the regulator is. So we've got a regulator that this year has that budget of 640 million. If we look at how many firms they regulate, obviously when they publish a paper, the numbers change, don't they? But typically the numbers that I've seen lately are 50,000 plus firms for conduct. I think it was 18,000 plus firms for prudential regulation. If you've got that many that many firms that need to be regulated, then you've got a staff of anywhere between 3,500 and 4,000 people. When you think about it, there's no way that as the market has grown and the complexity of it, that a regulator can actually deal with that if they don't become more outcome focused and more data led. The transformation program there, you can see that they spent a lot of money last year in the transformation, a lot of money again this year, and we've talked about this before, this building of this data science capability and capacity around understanding that we need data, we need information, we will slice it and dice it, and we will use that information in sort of groups of portfolio type like-minded firms to try and work out where our hotspots are. And I think I noticed that actually in the strategy from 22 to 25, there is a subnote where it says the FCA will be separately publishing their data strategy in the next couple of months. So it'll be interesting to see what that looks like. But what conclusions do you draw from the way that they fund the way that they operate?
I mean, it's an unenviable job, you know, to supervise, you know, nearly 60,000 firms out there in the market. I think is, you know, and having been there for 7 years in supervision, you know, it's tough to ensure that you are interfacing and got the right kind of oversight, you know, engagement, etc., with the firms in either sector, portfolio, etc. I think generally they're going about, you know, it has to be data led, in you know, to be smarter. The data strategy is kind of spot on, and you know, I think firms are probably feeling that now in terms of the kind of regulatory reporting, the importance that the regulator is going to place on regulatory reporting. I think firms shouldn't underestimate that their returns are a critical part of how the FCA kind of supervise firms going forward, and therefore kind of ensuring, you know, they're robust, they're accurate, etc. I'm sure most of the people on the call will be aware of, you know, the PRA letter that kind of went out last year, Dear CEO letter, and the thematic work that's been undertaken in relation to regulatory reporting, and I think that will only get tougher. I know through speaking to kind of ex-colleagues there that you know, obviously, and it's the same with any data, and you'll be well aware, rubbish in equals rubbish out. Okay, so the accuracy of that data is really fundamental to their data strategy kind of going forward. You know, that said, then, you know, it's about what you then do with it, how you engage with firms thereafter to spot outliers. The data is only, you know, prima facie some indicator, because every firm's kind of business models, etc., is different, and that's where you need the level of people skills, you know, the regulatory kind of know-how, the sector experience, the expertise to interrogate that data. And I think, you know, what we see in the financials from the FCA is, you know, another 10 million on the transformation, you know, etc., noting that actually that's the last year that the 10 million is in there. Thereafter it kind of goes into BAU. But the biggest overall cost is the people cost, which I think, you know, reflects, well, actually reflects things like, you know, inflation and employers' NI that come into bear. But fundamentally, that's the bit that they need to get right, which is the quality of the engagement subsequently. The data is the first part, the sort of supervisory engagement is the second part, and I think that's the critical piece.
That's great observations. Thank you. And on that basis, I think we've got another poll that we're going to ask Nick to set for us. And again, just to get a view from everybody. And actually, we all felt that there was a different tone to this particular business plan, but it was quite interesting around the measurements that the regulator was going to apply to themselves. So we just want some views. In terms of, is this good, is it not, or we're not really sure about how it feels. I know from the conversations that we had as we were planning this webinar that we felt, whilst there's obviously been a lot of documented issues and struggles within the FCA, that actually there was also a lot of progress being made in a variety of areas. Have you, for both of you, have you had any sort of issues around, you talk about having the right staff with the right regulatory experience at the regulator. Have you had challenges with the organisations that you worked with where lack of experience has hindered that relationship between the client and the regulator?
I think we have seen that, Julian. I think part of the issue has been with the move to the different models the FCA has employed within supervision in particular. They have mixed and matched teams, supervisory teams in particular. So we've seen movement across sectors, we've seen movement within teams, we've seen movement between authorization and supervision to enforcement. So I think that the main issue we've had, knowledge potentially, but equally, certainly the supervisors we've been dealing with do get up to speed quite quickly. More than anything, it's the continuity for the firm. If you're dealing with different supervisors day in, day out, actually just having that knowledge of the business, knowledge of the product set, knowledge of the SMFs within the organisation, and ultimately a knowledge of the culture within the organisation, that's not something that you can transfer and hand over to someone else within a supervisory team. So we've certainly seen consistency of supervision, and colleagues within supervision has been an issue. It's one that has caused delays actually for firms, but also for supervisors with things like skilled person reviews, for example, where we haven't had consistency from an FCA perspective. But I think firms have recognised that is an issue and have fed that back actually. But equally, what it is doing is it's cross-pollinating within the FCA some of the knowledge and skills. So, for example, getting more experienced individuals into authorization so that actually you can see some of the common issues that supervisory teams have. So actually working at the gateway to prevent access more robustly. So it has been an issue. Capacity and sharing knowledge, I think, has been a key one between teams.
Yeah, I think that's sort of very similar actually in terms of the feedback that we've had. But I think we've got the polling results on the screen now. For both of yourselves, is that a surprise, the results? It doesn't feel like a surprise to me. That feels like quite a positive endorsement to have 2/3 of people that voted saying that they think it's a good thing.
Yeah, I guess I'm slightly interested in the nearly a third are kind of indifferent, but actually, I mean, I genuinely think it's a really positive. It's quite a bold business plan, aligned to the strategy. It's kind of acknowledges that they want to hold themselves to account. They've worked hard. I know they've worked hard at kind of developing the kind of outcomes, etc., that are ultimately that they're striving for, being transparent about that, which I think is good from a regulatory point of view, and then acknowledging really that this is, I think having a 3-year plan really does set the tone of where they are as an organisation and the size of the transformation program that's in play. But generally, I think it's bold, it's transparent. It's clearly going to hold them to account, for example, on a range of different metrics. So I think that's probably consistent with the 66% there that kind of see it as generally quite positive.
Yeah, it would be interesting. Like you, I'm interested in the indifferent. If anybody feels either anonymously or named, why if they want to explain why they feel indifferent about it. I think in some organisations, though, certainly some that we've talked to, if you're not in the team that is the regulatory liaison point with the FCA, and you're a certain type of firm that maybe at the moment isn't as much interest to the regulator, you might not actually be feeling much different at the moment. Whereas we can see stuff, I can see, you know, you mentioned Section 166, and I've got some stats a bit later on to share, but I can see some change in the Section 166 work. I can see some change in some of the authorisations and the bar being set higher, but maybe not everybody feels it. I'm guessing, feel free, everybody on, to tell me if it's something different. But I think we also had some observations here around what the regulator's talking about. So this is just a, you know, a reiteration really in the business plan that follows on from the strategy about this is what we're going to do, this is how we're going to focus. And I think, you know, we're all familiar with SM&CR, we're all familiar around, you know, that was effectively a tool to enable firms to work with their culture, work with their governance and accountability. And from the feedback that I've seen from both the PRA and the FCA, there is a positive, a belief that SM&CR has had a very positive impact. And, you know, as a precursor to consumer duty, has probably set firms in, you know, in a very good state actually to move forward. But, you know, you've obviously been involved in culture work. Would you say, what would you say about the movement in culture in firms since SM&CR has been implemented?
I generally think it's been a really positive mood. I think it has, you know, certainly put a number of regulatory issues at the forefront of the senior managements that are responsible within firms. So kind of generally, you know, positive. Clearly, I'm not sure it's achieved its main outcome, and what I mean by that is, obviously, as people be aware, this was kind of brought in off the back of, like, you know, the banking crisis and the Parliamentary Commission of Banking Standards, you know, basically holding people within firms to account. And I still think that's incredibly difficult at large firm level. You know, all the fines that you see at individual level tend to be at much smaller firms, which I think is a challenge. And that's one to continue to kind of watch, really. But fundamentally, I think it's, you know, it's done the right thing, which is, you know, it's ultimately senior management within firms, you know, that are ultimately responsible for their business and ensuring compliance. You know, the regulator, you know, has a role to play, but as we've talked about, you know, in the context of, you know, 60,000 firms that they supervise and regulate, you know, that it is a kind of, it's not a zero tolerance kind of regime. There are always going to be failures, and you know, senior management in firms are the first point of call for that.
Yeah, absolutely. And I think with the consumer duty as well, Paul, it's an interesting one. It's almost a tacit admission from the FCA that actually, you know, although the bar's been raised, it needs to continually be raised. And, you know, the consumer duty by its very nature could be an admission that actually firms haven't quite gone as far as they should have when it comes to things like culture in particular. So that's an interesting one as we reflect on that further on in the slides, Julie.
Yeah, absolutely. Well, let's move on. And let's have a look at a few of the things. And I know there was a number of observations that you both had. And Matt, you had an interesting one around the raising standards and promoting competition. Do they go together? You know, is there a rub there? And it'd just be interesting to get your views on that.
Yeah, absolutely. I think, you know, the FCA obviously have a competition remit. And clearly they want to drive positive change. They want to promote competition. But there's an interesting line where actually the bar gets raised so high that actually it becomes almost anti-competitive. And that's really one of the balancing acts that the FCA have at the moment. I mean, we look at certain markets. We do a lot of work in areas such as high cost credit, and clearly a number of market participants there have left the market altogether. You know, they would argue that the standards are that high now that that marketplace is effectively being eroded. I think there's always a balancing act here, and actually raising standards is absolutely a positive thing, but the FCA have to be mindful equally that they don't potentially, you know, reduce or destroy competition within that marketplace. So, you know, we've seen the sharp end of that within high cost credit, high cost short-term credit in particular. I'm a real advocate for, you know, increasing standards, raising standards, but they just need to keep that competition objective really close to heart as well, because actually, you know, the fallback for that sector in particular, potentially illegal lending, potentially, lenders that aren't authorized. There's real issues there that the FCA are grappling with all the time. And, we've seen recently Amigo, for example, have had their scheme given the green light in the court. So, the FCA clearly is happy to work with firms just to get that balance right. And, they don't want to lose out. They don't want to certainly destroy markets altogether, but it's a really fine line, isn't it, where you're raising standards to such a level that actually that marketplace might not exist in the future. So yeah, it's a fascinating one. They have got a number of competition analysts, competition individuals, data scientists within the organization, and they do deliberate on this all the time. Actually, how high can you draw the bar? And it's a gradual change. You can't just flick the switch and suddenly increase standards day on day. But things like the consumer duty, things like the focus on culture and governance, it's a gradual raising of the bar that we've seen, and I expect that to continue.
No, that's really helpful. Thank you. And Paul, I know when we were talking before the event, we talked about, how big is that challenge for the regulator? They've got this strategy. They're talking about becoming outcome focused. How big is that change for them, both culturally and from a skills perspective, to actually move those supervisory teams and the wider teams to that particular focus, in your opinion?
Well, I don't know. It's a good question. I mean, I think that the transformation program is quite substantial. That said, there are some very competent people there, and I think, like any organisation, what you're striving for is consistency across the piece. Consistency across authorization, consistency across supervision, etc., to ensure that when you're engaging with the regulator, you can do it in a professional kind of way, based on kind of evidence, based on informed kind of position. So look, I think that's a challenge. Particularly turnover is a challenge. They've lost a lot of people, and they kind of recently went through their kind of aeration scheme of some of the sort of senior technical specialists kind of moving kind of on to kind of create headroom for others. So that's really a challenge for them, as it is for any organization, is to ensure a minimum level of understanding, approach, etc. I think critically, judgment is really crucial, particularly when you're dealing about kind of things like outcomes, and it's less prescriptive based, it's less process driven. It's really trying to weigh up a number of different things to ensure that firms are delivering the right outcomes for customers, and I think judgment's pretty critical as part of that process. So it is a challenge, and what clearly one that they're very live to. Again, be interested in the chat from people in terms of their engagement kind of with the FCA and what they're seeing. I know one of the biggest problems is also the contact center, and someone's kind of mentioned this in the chat, is actually firms having the ability to engage with the FCA, and obviously only those firms really that are in the kind of fixed kind of portfolio have that kind of luxury really. So I think a level of engagement to reach out, to ask questions, etc. Ultimately we're all trying to achieve the same thing here, which is kind of raise standards for the benefit of consumers and the industry.
Yeah, absolutely. And on exactly that point, this setting and testing higher standards here, I was looking for some information and some data that would talk to what the regulator's doing in this particular area. And again, I'm just going to look at some notes here, because there's some focus around some recent changes in the FCA's own powers that I thought was quite interesting, that allows the FCA to act more quickly to effectively either cancel or change somebody's regulatory permissions. And I was just looking at some statistics, and some data that I got off this morning said that since May 2021, they've done 1,090 assessments of firms and whether the permission set that they've got is relevant to their business in the here and now, and whether they're using it or not. And it was interesting. I know that the regulator likes to persuade firms to volunteer to do things as opposed to be forced. But the numbers were 264 voluntary cancellations of permissions and 47 modifications out of that 1,090. So again, what that said to me was, actually, they're telling us that they're setting and testing and they're making higher standards. They are changing the way that they operate to allow them to be more effective. And then they are doing stuff, if I put it in that bucket, that actually shows that they are doing what they said they're going to do. So for me, it kind of makes it real. But both of you have talked about consumer duty. You know, it's the big thing, isn't it, at the moment? And I think this setting and testing higher standards, when we look at what the regulator's saying, they're focusing on, and consumer duty is going to be one of the tools that we're going to use to do so. We've run some events and we've done some polling, and majority firms have fed back to us that they are in the gap analysis stage, where they are turning the internal spotlight on themselves. Do you think that firms really, though, are going to be able to deliver consumer duty without external support from firms like yourselves and other consulting firms? Because it strikes me that that's going to be really difficult to mark your own homework, as it were.
Yeah, I mean, I think with consumer duty, we're all going to go on a journey together here, which is, you know, it talks about kind of like the raising of the standards, the raising of the bar, etc. And my view from engaging with a number of firms on this, and we're already supporting firms in terms of their kind of, you know, the awareness and implementation, the gap analysis, etc. Despite the fact that the final rules don't land until the end of July, but sort of some firms think on being quite kind of proactive about it. Is that depending on the sector that you're in will depend kind of, you know, how far away you are from kind of relevant bar. So, you know, I think if I take, for example, communications, you know, there's a critical piece in there about ensure, you know, all firms will have ensured that their communications are clear, fair and not misleading. You know, no one will, you know, wants to do non-compliant kind of communications. But clearly there's a big emphasis to change that, to address the imbalance of knowledge that exists between consumers and their understanding of financial services. So and there's a requirement in there to kind of test communications with consumers. I know a lot of firms will have done focus groups and things like that before, but really thinking about kind of positioning, placement, layering, font, behavioral biases, all these things that ultimately can you know, raise the standard to ensure that consumers ultimately, or firms can support consumers in better understanding and better engagement. So I think that and you talked about a number of different sort of stats, I think, that demonstrate the kind of raising of the bar. You talked about permissions, and people are, I think there's a clear kind of use them or lose them type. You know, if firms are not using the permitted activities that they have, then I think, you know, that the FCA does want to ensure that, you know, that you know, that they're taken away or they're voluntary kind of removed, etc. There's a lot of focus on the threshold conditions, and we're seeing kind of obviously an increase and a debate around the level of threshold conditions, and, you know, again, encourage firms to monitor their threshold conditions to ensure that, you know, that they are you know, in meeting all the threshold conditions on an ongoing basis. And, you know, certainly some firms don't always have that level of MI. So I think we're sort of seeing, you know, a number of kind of practical pieces of MI, but then fundamentally the consumer duty piece, which is a significant kind of and ultimately one which will drive a lot of the focus, and particularly when the FCA is kind of looking at setting standards, higher standards, a key focus, you know, focus area number 2 for them in the business plan. That's a critical piece.
Yeah, absolutely. And most firms, to your point as well, Julie, are in that gap analysis phase. I think there's some really meaty bits of the consumer duty. If you think about some of the outcomes Paul's mentioned, customer understanding, but price and value has been a really, really tricky one for a number of our clients. And sometimes we just act as their sort of independent counsel on things like what is fair value, how do we set our pricing strategy, you know, what does fair look like in that context. And you know, clearly we're guided by what other firms are doing, but also what we think is right and what the regulators historically done with its work into things like GI value measures and the high cost credit interventions. So you know, it is gap analysis phase at the moment for a number of our clients. We're often just acting as that sort of impartial intermediary, helping them on that journey at the moment. And then obviously the longer journey of implementation is down the road somewhat.
Is that critical requirement, isn't it, sometimes, to just have that independent voice that can actually give a different view and a different opinion. It's interesting, isn't it? So they've set out their strategy, and then they've focused on these 6 core areas that they're going to do. And we've talked a bit about some of the things that they've already done. But it struck me that with the language, as I say, reading that language and understanding it, there's a small sentence in and amongst everything in the document where they talk about these 6 areas, and it just says our decisions will be data-led. So back to Paul's point earlier about the importance of accurate regulatory submissions is critical, because firms will be judged. And we've always said it, if the regulator thinks you don't think regulation is important because you're late with your regulatory reporting, or your regulatory reporting is inaccurate, it actually tells the regulator something about what the firm feels about being regulated and how important they feel. So, you know, it is take note, isn't it? The regulator's watching and they're looking, even if you don't realise and you don't feel as if you're being watched. They're making some assessments through data, you know, that might mean that they're much more interested in talking to you than you might imagine.
Yeah,
So,
I mean, sorry, just to add, and just as a little anecdote, really. So also talking to somebody there, and particularly with things like late submissions, you know, they were talking about kind of 3 strikes and you're out. You know, so it's just, again, it's just sort of just another example about, you know, how critical data and MI is to the effective kind of regulation. So yeah, really looking at it both in terms of timeliness of submissions, quality of submissions, and then sort of subsequent kind of engagement.
yeah, absolutely. It'll be interesting to see. And going back to what the FCA have said they're targeting, so these top line outcomes for consumers. Matt, I know with regards to you know, fair value, you had some observations around, I mean, you made comment about some already, but you had some observations around the FCA's work. We know what they've done in the past. Have you got a view on where you think they're going with this, or will it be all wrapped up in the consumer duty policy statement that we'll get at the end of July?
Yeah, it's a really interesting one. I think there's much more to come in the policy statement, Julie, on fair value in particular, and it's one that our clients have really actually struggled with. You know, we have been guided by what's come out in the past. So, for example, you know, the FCA have been really clear on things like the value measures within the GI market, and actually that generated great debates a few years back around things like claims ratios, things like, you know, metrics that firms had, but equally when you have to give it to the regulator as part of an information request, it places a lot of focus on that. So, you know, the FCA does tread a fine line here, though. They're not a price regulator, and they will say that value is much more than just price, and I would agree with that. But you know, they're really asking firms here, I think, to dig deep into their MI, to really understand their customers, understand what the products that customers require are, make sure the product governance process in particular, which is critical here, plays a part in, you know, the ongoing value of that product to consumers. And they don't, you know, clearly there's issues around historically consumers just staying with the same product provider. You know, the FCA is really working with their behavioural scientists now to actually understand practices that could be used to actually just keep customers at the same organisation on the same product, sludge practices, etc. And they're really trying to tackle that. So I think there's a lot more to come here when we see the policy statement. The FCA won't be probably as prescriptive as we hope on this. I think it will be down to firms to make their individual value assessment. And like I say, that's more than just price. That's looking at a number of different metrics to show that actually that product is contributing fair value to the customer. And of course, that's one of the 4 outcomes as part of consumer duty as well.
Julie, if I just come in there, I mean, I must say, I really like what the FCA have done here, and particularly in relation to sort of fair value, because what they're basically saying is, you know, there's a range of different things that you can include as part of your methodology to assess kind of fair value, and there's some things you can't do. And one of the things you can't do is you can't ask the customer. And you can't ask the customer, and I think that's because, you know, your view of value will be different to mine, will be different to Nick's, will be different to Matt's, etc., etc. So actually, it's not really that useful. So what it does do, and align to kind of what we were talking about in governance and things like that, is it places the emphasis on senior management within firms to determine the right price vis-a-vis the benefits, vis-a-vis the product particulars, etc. And you know, I think that's the right approach kind of going forward, which is, you know, what the FCA don't like is they don't like excess. Okay, so, you know, then they're not a price regulator, but what they don't like is excessive kind of, you know, you're all commercial organizations, etc. You know, there's a premium, etc., that you can you know, obviously incur as part of your, you know, proposition development and product offering. But fundamentally that sits with senior management, and I really like, you know, that aspect of the of outcome kind of within the consumer duty. Feel free to disagree if you're on the chat.
Sorry.
No, I was going to say, if anybody disagrees, feel free to put so on the chat.
Yeah, absolutely, absolutely. And I think we, you know, when we've looked at this, we're quite interested, because, you know, if we're focused on, you know, regulatory people, processes and regulatory review processes and the work that we do in the sector, and there's been a lot of focus historically and ongoing, as there should be, around suitable products, so the right products in the right hands at the right time. And when Nick and I were talking about this, we found it quite interesting that for the first time in years, the FCA called out training and competence as being part of the MI that firms should be looking at as far as consumer duty is concerned. And certainly, I know I asked the question of you earlier, but that certainly has made a difference, and we've seen a lot of interest in, I need to refresh my T&C arrangements, or I'm paper-based and now I need to automate, I need to utilize you know, data, I need better MI, and the only way I'm going to get that is to automate the processes to a certain extent. So we've certainly seen the start of some changes in behaviour in firms directly linked to the consultation paper, which is good, because it says that there's market activity ongoing.
Yeah, look, and for things like consumer duty, for us, one of the things that we're advocating and doing with firms is engagement, you know, ensuring, you know, a common understanding. Obviously this affects, you know, people throughout the organization at different aspects of the product life cycle, through to you know, the enhancement in the conduct rules that comes about as part of the consumer duty as well. So look, I think all of us would probably acknowledge that process is only one part, and I think firms typically rely too much on process. It becomes you know, they like process because it kind of keeps them, you know, it helps manage risk. It operates you know, in an efficient way, you know, but actually, with things like vulnerable customers, with things like, you know, firms need to encourage their staff to step outside sometimes of process to ensure that the right outcomes are achieved. And therefore, things like training become a critical aspect, you know, empowering staff, training staff. And, you know, and we're seeing that across a range of different things, whether it's, you know, training on collections, on complaints, on financial promotions, on, you know, a range of different things really. And, you know, where it's just acknowledging the critical role that people play within any organization really.
Yeah, and I think that there's a point here that I wanted to pick up. Everything, you know, on the slide here is, you know, summarising really where we've come through and we've walked through this webinar. But I noticed that when I was looking at we talked about portfolio supervised firms and fixed supervision firms. So just if there's anybody on that's not familiar with that terminology, from an FCA perspective, they will categorise you, and you'll either be supervised with a regulatory relationship directly in place, or you'll be via the call centre, as we've alluded to. And we've had commentary from firms that say, but I'm not that big, or I don't think I'm that important, and I don't really think the regulator's interested in us. So I did a bit of looking back over the last 12 months, and with the section 166s that the regulators put out, which is obviously where they're saying, look, we either have a concern and therefore we want an independent assessment of this area, or we want more information so we can make a decision, that 90% of those actually went to portfolio supervised firms and not the larger dedicated supervision firms. So again, I think that's a thing that says, just because you're smaller, just because you might not be a high street name, doesn't necessarily mean the regulator isn't interested in you. The bottom line is, are you potentially negatively impacting consumers? Matt?
I was just going to say exactly that, Judy. There's been a real shift potentially in thinking within the regulator, which is there's been a tacit acknowledgement that a lot of the harm generated now is actually from those smaller firms. And we've seen portfolio supervision teams collaborating, working together, looking at issues that are thematic, so cross-sector, but then also issues that are sector specific, and really deep diving into firms' targeted information requests, using that data that we've talked about to really hone in on actually where there could be potential consumer harm. And it's been a different approach historically. You're right, we've seen section 166 is typically on the bigger firms and the fines focused on the larger organizations. I've certainly seen that shifting recently, and I think that backs up your point exactly.
No, that's great, thank you. And I know we've got some observations here that I put up, and Matt, and I think you had some commentary about this. This is just, interestingly, information that we've taken from organisations and individuals that we've worked with, and it just struck us how critical data automation and MI is to firms, and not underestimating how valuable it is when a team that are running a particular part of the business are given the right tools to do the job, or they're given the right investment, and that cultural knock-on. And I think, Matt, you had some observations as well on this.
Yeah, absolutely. I think the business plan was fascinating, because actually it's the first time I've seen the FCA allude to things like AI and machine learning as part of their own approach to supervising firms, to the gateway to authorization. So for me, it goes hand in hand. I think firms have probably had the lead when it comes to using RegTech and actually putting in technology solutions and systems. The FCA is obviously now trying to catch up and is doing that from a supervisory perspective as well. But for me, with so much digital activity, with the majority of consumer sales now being through digital channels, it feels only right that RegTech is right there leading the way when it comes to some of the automation, some of the monitoring, some of the QA, some of that ongoing embedding within organizations. For digital sales, we've supported and looked at a number of organizations that are primarily digital natives now. The majority of their business is through digital channels, and those bits of MI that you use, those deep dives that you do on individual customer files, it's only possible by embracing RegTech.
Yeah, we like that, obviously. We've got a vested interest, but obviously we have another poll, I think, that Nick is going to put live for us. And it's just interesting to see whether, we're trying to get that, are firms feeling this? So we know that the regulator is using data, and they're more focused, and data is driving a lot of the invitations into thematic reviews. But even when there are thematic reviews, it's not necessarily a huge swathe of firms that will be involved in all of them. So we're just trying to get this feeling of, is this rippling down yet? We're starting to feel it from where our position, but is it affecting yourselves? And I guess let's have a look. It's interesting. Really interesting. Does that surprise you? So 60% no change as yet. Yeah, it's probably fair enough. A few people obviously focused on getting quicker identification of issues within firms. just over a third, lots more data requests. Paul, does that feel about right as we're in the early stage of a journey?
Yeah, I guess I'm just reflecting and pondering that really as to whether it's aligned to my expectations. I mean, to be honest, the 60% feels high to me, which is I would have expected more firms to have felt, you know, a greater kind of requirement for kind of MI. So that's quite interesting. But then obviously conversely 35% of firms are experiencing kind of way more requests kind of for data as we've kind of positioned it. So yeah, that's quite interesting as to kind of, I don't know whether it reflects size of firm or different sectors or different kind of, some firms, you know, obviously thematic activity that is undertaken. This, I mean, the data requests are BAU, you know, as well as, yes, I'm interested in particular kind of issues, and there particularly then a number of firms I know that seem to always get caught up in the thematic reviews that kind of take place, etc. So you know, maybe that the kind of, I get way more requests for data sort of is part of that sort of thematic work.
Yeah, I was just going to add as well, Paul, there's obviously a number of data points that the FCA collect routinely that won't come about through the way of a data request. So actually some of that, be that complaints data or other data the FCA have, I think they're just starting to use it slightly better. So Julie, the example you gave of the principal firm earlier, my understanding was that they were investigated as part of a complaints return. I think they had, you know, the whole principal networks at the moment, they generate a significantly higher volume of complaints generally. So, you know, the FCA is using data it has at its fingertips to be more targeted, not just through information requests as well.
Yeah, absolutely. Now I know we've talked quite a lot about all sorts of things, and I'm suspecting Nick's probably got a few questions that he wants to throw at us from because I've been failing to keep up with the questions and the chat, but I'm sure Nick's got his finger on the pulse.
I have indeed. In fact, both of that, and I am conscious of the time here because we've got an hour to broadcast, and we've still got a lot of people logged in, so we'll continue for another couple of minutes if we may. But we will pick up all your questions. There's a few comments that have come through that warrant a bit of a response as well. So as a team, we'll review those after the event, and like I said, share them as part of a document where we consolidate all those thoughts and comments and answers together for you. But I wonder whether I can be cheeky and ask you each for a view, I guess, on your key takeaway from having reviewed the business plan, and your key suggestion or recommendation in terms of, I don't know, firms' focus, their a key action, whatever you think would be your advice, your key bit of advice for firms by way of a response to the business plan. And while you're responding, I'll also launch our final poll here as well. So this is really just an invite for everybody, really, in respect of whether you would like additional support from us, from the guys at Square 4, or indeed just to register for future webinars, podcasts, and we can send you out those notifications and invitations as you go. But if you need anything from us in terms of ongoing support or a closer look at what RegTech can do for you, or indeed that support from the team at Square 4 from a regulatory perspective, and making sure you're operationally sound and effective, reach out to us, and no obligation necessary. We're part of our roles here is chatting about these kind of issues, so quite prepared to talk with you on any aspect of this. But your key takeaway, Paul, what would be your thought?
So, I mean, fundamentally, I think it's really clear on the outcomes they're seeking, and ultimately to hold themselves to account, you know, going forward. And I like it. I think it's bold, it's brave, it's transparent, it, you know, demonstrates accountability. You know, the proof is in the eating. Okay, naturally. For firms, that I guess a kind of key takeaway, I'd probably just say, you know, because we've got a number of different firms on here representing different sectors, MI. So MI, in terms of the quality of MI, not just, you know, I'd say the quality of your MI that you give your senior management to ensure that they are got the right kind of delivering to the right outcomes, that they've got the right kind of conduct, MI, etc. In the business, through to the integrity of your MI that you provide to the regulator. Because increasingly, whether that's around kind of thresholds, whether that's around you know, other kind of, you know, regular reporting, it increasingly is going to drive action. So ensure that you know, that the robustness and the accuracy and the timeliness of that submission.
Would you have anything to add to that, Matt? Is there anything additionally or anything on top of what Paul suggested?
No, I absolutely agree with Paul. I think the three main takeaways for me are going back to the transformation slide, Nick, which is, you know, we're dealing with a regulator here who wants to be more innovative, more assertive, more adaptive. And that means that actually as firms, we need to be, you know, equally innovative. You know, we need to adapt to the environment and, you know, actually take those changes that are needed. And I'll just close by saying those four outcomes of the consumer duty, if we can use that as a lens for everything we're doing, that will sort of future-proof us quite well. So that's focusing on your products and services, your price and value of your products, that consumer understanding, but also the consumer support points. Those are the four outcomes with which really, as firms and individuals, we should be using that lens to look at everything we do.
Superb. And Julie, anything from a really practical recommendation point of view? I mean, in terms of firms' response or approach, do firms just carry on doing what they do, or do firms need to take a step back and really analyze something critical? I mean, Paul and Matt have both mentioned the value of MI, and you know, we're talking to organisations all the time about the production of MI, the ease in which they do that from an operational efficiency point of view, and the need for accuracy and timely reporting as well. I mean, we've spoken about it maybe already, but would that be a suggestion, or would you have anything else to add?
No, I think it's always hard going last, isn't it? Because all the best things get said first. But I would absolutely wholeheartedly agree with Paul and Matt. But I think also now is the time for organisations to say, do they truly understand all the elements of the business that they do? And that might sound like an odd statement, but the reason that I say that is that firms are submitting regulatory data, as Paul's alluded to, and sometimes that regulatory data that they submit is causing some concern at the regulator, but it's not causing concern at the point in time that the firm submits it. So is there more focus to be had around that slicing and dicing that MI? And also Paul's alluded to it, I think both Paul and Matt, how critical the people element are. So are we confident and comfortable that our people, our processes and the empowerment that they have, are they sufficiently robust and competent? Are they delivering the right MI that will in turn support the business to support itself around the new consumer duty, if that makes sense?
It makes sense to me. Perfect. Thank you all. We'll draw it to a close there. We're somewhat over our time limit. Thank you for all of those people that hung on and stuck with us. But like I said earlier, we will be sharing a recording of the whole session with you within the next day or so. So thanks again to Matt. Thanks to Paul. Fantastic guys to have you on board. And I'm sure your comments and observations were of huge values. And as always, Julie, thanks for your input and insight as well. Fantastic stuff. Have a good day. We'll draw it to a close. We'll be in touch with that follow-up information, copies of slides, recordings, collateral, Q&A documents, all that good stuff. And we look forward to seeing you at our next webinar. Thanks to everyone. Have a good day. Bye.
Okay. Thanks, Nick, Julie, and the Worksmart team. Appreciate
Thanks, everyone. Have a good day.
Thank you, Paul. Thank you, Matt.
Cheers. Bye.
I don't know whether you just want to hang on, Paul. I mean, we'll just, there's a bit of housekeeping that we'll do, and then.
Yeah, happy to. Just...
Nick, one thing I don't have.
Hang on, Matt's just calling me as well.
Right, okay.
Hi, Matt. I'm still on with Julian.
Oh, I dropped
No,
off.
you dropped off.
Do you want me to dial back in? I can dial back in.
Yeah, why not?
Nick, just to say, I don't have the controls to do the normal
Oh,
attendee piece because I think I've got you as the host.
okay. How do I hand that back to you then, Julie?
Okay. You okay if I pull that back to me?
Yeah, pull that back and do your bit because I'm not sure.
Actually, I can't. I don't think I can. I think you need to give it back to me. So if you go to the panelist, if you go to yourself and to the right hand side of you, I think you can pass it back to me. Fabulous. Right. With me. Are you okay to stop the recording, Nick? With me, chaps, we're just closing this down so that it becomes a private room for just the four of us again. It just takes a moment or two of housekeeping.
If I've made you host again, Julie, do you have the control for recording?
All right, okay.